Hi, everyone. Thanks for tuning in to the Ask Valor Masterminds podcast. I'm Galan.
I'm Joe.
And we're coming at you from the BD Local Studios in Tacoma, Washington. This podcast is brought to you by CR Gutters and A Advanced Septic Services. Thanks for tuning in. Enjoy the show. Thank you. All right, we're back. We have our guest, Sandra, in. Let me do my hair toss. Check my nails. Joe, how you feeling?
Good as hell.
There we go. And we have Sandra Robb from Capital Tax Service joining us to finish this episode of the Ask Valor Masterminds podcast, brought to you by CR Gutters and A Advanced Septic Services at BD Local in Tacoma. So we'll get right into it. Tax season, it's hectic. So this is going to be a hectic little segment.
It is.
So 3 mistakes business owners make and how to avoid them. What can you say to our viewing audience?
Okay, the biggest mistake is lack of documentation. So I'm in the middle of a couple of audits right now, and the business owners think they have documentation, and they don't. So the IRS accepts certain documentation and not others. So please don't make the mistake that credit cards, bank statements is good documentation. It's not. Keep your receipts. Okay, every single one of them, and I know it's a pain. You can take those receipts, you can throw them in envelopes labeled with different expense categories. And then if you need some ideas on what those expense categories are, shoot me an email, I'll send you a list. It's really not very hard. It's a matter of establishing good habits. So the other thing you want to do is for meals receipts, especially, write the purpose of the meal on the top of the receipt. Who you met with.
Hungry isn't one?
Hungry doesn't count.
Just
no,
checking,
it's
so.
got to be a business purpose.
Okay.
Sustenance for your body so you can still think doesn't count.
All right.
That doesn't work either. It has to be who you met with. Why did you meet with them? Okay, and be able to explain it. And it needs to be done at the time that the meal occurs. So this is one of those really cool words, contemporaneous. I had to look it up.
Holy cow.
In all fairness, yes, but it's one of my favorite words. What it means is you keep track of it at the time that the event occurs. And that's the big deal.
Do you use like Receipt Bank?
I don't. Doesn't mean you can't.
Right. It's just taking a picture of the receipt, putting the category, putting what it's for.
Then it logs it
and then
already.
It logs it for you.
Yes,
And
right
then
on
you
the
can-
receipt first.
And then you could throw that receipt away because it keeps a PDF
Yes.
copy of it.
Yes, and I have clients that do that. So that's a really great way to do it. So the goal is to establish habits that work for you.
Yeah.
So if that's really easy for you, then do that.
Okay.
Not everybody is good with the electronic part of the world. I'm like between the two. So the other thing is your mileage log.
Mileage IQ?
Mileage works great. My son uses Mileage IQ, and that works really well for him. The one thing I want you to know is that do it contemporaneously. I gotta say the word. Do it contemporaneously, but you
Word of the
also
day.
want to put the address on there. So the tax code does not say anywhere in there that you have to have the address. But if you're audited, the examiner will disallow your mileage deduction if you don't have addresses and business purpose. So it'll save you a whole lot of your time, my money. No, your money, my time, to take it up to tax court and tell them that you qualify.
Right.
Yeah.
Mileage
it'll save.
IQ could show you the address that you came from, went to.
It'll log it
could-
for you
Right.
automatically.
You select business or personal. You could go into more. It's cost you a whole $70 a year.
Yeah, worth every penny.
100%.
Yes. Yes. So.
And what about income?
Document your income. So here's the other favorite thing on exam. They go through your bank statements, and everything that got deposited into your account is taxable income. Well, in real life, it's not,
Right.
right? People give you gifts, money gifts, you win a prize. Well, actually, that's taxable. But you want it to be taxable under other, not under your business. So what you want to do is document those items that are not business income or rental income. So these principles apply to those who have rentals as well. Okay?
Cool.
Yes. Big
So
deal.
run your business like a business,
That's exactly right.
right?
Yes. I know. But you have to know how to
Entrepreneurs,
do
listen up,
that. I
okay?
know, but you have to know how to do that. So give me a call. Conversation is free. I'll talk to you about how to run a business as a business.
Nicole said earlier to delegate. So this is one of those
Yes.
things a business owner should delegate to a tax professional.
Yes.
Correct.
Yes. Information. Yes.
So lastly, just the hiring part. You know, hiring an employee or a contractor. Can you just
Oh, yes.
one quick bit on that
So
before we
there's a
wrap
big difference between an employee and a contractor, and people
Mm-hmm.
assume that if they pay somebody less than $600, they qualify as a contractor. Those are not the rules. And the rules are that a contractor actually has their own business license, their own equipment. They're actually running their own business. That's a contractor. Hiring your friend to do some work for you, who is using your equipment at your location, you may even give him a ride to the job site, that would be an employee. Put them on payroll. Save yourself the heartache. So that will be recategorized as an employee. Any taxes would be assessed along with penalties and interest. It'll cost you twice as much as it would if you had just done it right in the first place. So you really need to do that. There's one little piece that we missed that I wanted to talk about, and that was running your business like a business.
Oh, yes.
That includes your rental property. Run it like a business. The reason you're going to want to do that is because there's a new deduction, new last year, 2018 year actually. It's 20% of your net profits you get to take off the top of your income before calculating federal withholding on your tax return. Highly beneficial. But the rules are you have to run your rental like a business and you have to run your business like a business. And if you want more information about that, give me a call because there's a whole lot more to that.
I like the teaser.
Nice. So we'll have Sandra's contact information on screen. Thanks for coming on again.
Thank you.
Our first repeat guest. Thanks to Nicole earlier. Joe, any last thoughts before we close out?
I like that they both mentioned to delegate, and that's also a word I'm hearing more and more from more businesses. Don't try to do it yourself. Delegate it and work on your business, not in your business.
Right. So thanks, guys, for tuning in. We'll have Nicole's contact information readily available. Sandra's available. And then we'll tease out what our upcoming episodes will be. So we'll see you guys in another 2 weeks. But thanks for tuning in. Coming at you from the BD Local Studios, I'm Galan.
I'm Joe.
And we're out. Thanks, guys.
Thank you.
Thanks.